What's going on, guys? Welcome back to another video. Today we are looking at gold. Now this morning we have shifted higher through our original swing high target. We have now hit our SP to deliver prices lower. So we're going to walk you through what we have seen and what we expect from this, and then we're going to go ahead, stick you guys on fast forward so you get to watch this without having to sit through hours of price action. We'll give it to you in a couple of minutes. So let's break it down here. So first of all, we spotted this range for buy side moves here on gold. Price delivered very nicely to the upside. We had a counter SP run to the sell side, then price is moving up. We're now looking at price at this window above. Now if we come down to the 1 minute, you can see within here how we created internal liquidity after sweeping the last created high. We took out a small internal SP, which only indicated to us that running the lower SP may be probable. We have now hit the lower SP, which gives us a sell side window. This sell side window looks a little something like this. If we come back into this area and deliver another bearish breakdown, that will confirm to us that selling into our lower targets is valid. Bear in mind, this is a counter trend trade. So if entering a counter trend trade, we need to be using less risk and ultimately shallower targets, because we don't want to rely on a pullback delivering to extreme points within price, because we all know pullbacks are only in place to deliver liquidity to an area of efficiency, for example the lower 50%. So we have a liquidity target low right here, which I believe we could get a pullback from, and we have ultimately our sell side origin down the base here. So if we get into the lower area and we start to break higher, then we will have a entry for the trending directional bias. But as of now, our SP is broken down, so we are looking for price to sell lower. So remember what we're looking for here, guys. We're looking for price to run back into this area and then structurally confirm sell side. This being a counter trend move means we'd prefer to look for long entries at the sell side origin or at the short-term liquidity area right here. Overall though, I believe we're going to pull back into this first. I would like to see this high swept if we do pull back into here, then break down to lead us into that sell side move. Keeping in mind the whole time this is counter. Alright guys, so we have now taken the last high, which means our SP moves up from the previously created low to the newly created low, which is responsible for putting in the high. So the low that's responsible for putting in the high is now the SP. If we take the SP, we need to see momentum and imbalance created on the movement down. This is going to validate the order flow coming in to take price lower, remembering this is a counter move and that it should be treated as a short-term scenario only. Okay, we've taken it now, which has validated for us some sell side movement here. That is going to be playing from this area right here. And the scenario is going to look something like this. Whether you play off of the internal or not is completely up to you. Leaving some space above the high here. So we're looking for this to run lower now. Looking for this to come down into the low points here. Remembering this is a counter move, so we should be using less risk. And of course, understanding that there is less probability of this playing out as a normal trending move would. Okay, so after sweeping out the internal SP, which is situated at the smaller time frame low here, If we come down and we tap this lower point of liquid, I would expect a relatively expansive move down to the lowest point of liquid, and in turn taking us down to the internal liquid low, which is the first origin of the sell side move. Again, keep in mind this is a counter scenario, so this is against the higher time frame order flow. Okay, taking the liquidity low now, I expect price to pick up some momentum here and move its way lower through the lows created on the way up to this area of entry. Right, so there we're having quite a nice expansive move down here. I know you said that you were in this position, Alex, which is great news. How much risk did you use on that entry?
Half.
0.5%, nice. So keeping in mind the principle of the entry right here, we're using this short-term area to establish an entry point. We have used internal liquidity created at the entry point to establish price breaking down. Realistically, we should expect it to have a form of pullback within here, but we shouldn't expect it to pull back too heavily. Now, if it does decide to pull back like so, we should already be looking to mitigate our risk. Overall, we expect this position to run lower, but we need to tag this lower point of liquid to fuel that move down. Tapping back into an area of imbalance right here. We want price to come back down, take out this low, and in turn run into the lower point of liquidity, and from there lead us into a reversal of short-term order flow back into this area here. Keeping in mind this is a counter move. You're going against the overall pre-established notion of the market. Okay, so price pushing up from the pre-mitigated area of demand relatively aggressively. Now this order block that we're at right now is going to serve as our last point of rejection. It's going to be that area like that of supply, and then you have a refined area which we're just tapping into now. If we do not react from these points, then overall price is more likely to run our high and continue back into our sell window. If we reject from here, and that's great, we can expect price to continue going lower. If not, accept it for the short-term one-to-one profits that it delivers. Okay guys, so far we have rejected once off of here. We are creating imbalance candles, which are what the yellow candles are. As it stands, we need to see price pushing deeper back into taking out this previous low here into this movement. Even though we aren't going to be breaching our stop, we are ultimately going to be running back into the area that we have sold away from. Now, as I stated earlier, the liquidity area we use to get into the position should be the point of protection when it comes to trading these moves. If we're following liquidity from an origin, taking the SP, tracking it down to pretty much the origin, a protective measure needs to be put in place, as we have mentioned previously in all of the liquidity videos and live price videos. Whether you're partialing out, whether you're moving your stop to break even is going to depend on what kind of management you're using. Overall, a way of reducing exposure needs to be put in place. Now we're looking for this low to be ran here, which we have just taken. Okay, so if we take the low right here that has caused the sweep of the high, then we are back into our sell side. And I would expect to see price be relatively impulsive from this point down. So within this candle formation, we need to see a large candle form here, taking out the internal lows. And then from this point, we need to see this area of demand at the base completely fail. So we'll see what happens. At formation of this next candle here, we want to see it close out below this candle low, and then we should be seeing price fall back down, taking this low right here, bringing us back into this area of demand. Of course, if this doesn't happen, that's because we are going counter our overall trend direction. Okay, so we have pushed below our previously created low right here. We're now starting to push back up again. If we take this high right here, I'd like to see reject push us back down through these lows. If we don't reach this, I would look expansive move down through these lows. Remembering, again, I will say it many times in this video, that the overall trending move is to the upside. So this is essentially a pullback based movement. So you can see that we played higher. We are still playing off of our higher area of supply here, which is right here. Now, this area of supply is essentially the previously created area of supply that caused the last drop down. Now, the one point to focus on, if we take this low down here, okay, so right here, if we take this low, then we can expect price to travel down into our area of demand right here. As it stands, I would say that this is probably only going to run to the partials, playing off of the area of demand, now pushing back up. If it hits the low that we've just highlighted, I will of course change my idea behind this scenario, but as it stands, I expect the short-term targets that were met to be the only targets that are met. We will play this out nevertheless, and if we have any movements either against or in our favorable direction, we'll be back with you. Okay guys, so another point to focus on here is we are creating internal liquidity within our 5-minute range. Within this 5-minute range, we are creating highs, putting in new lows, creating highs, putting in new lows, creating highs, putting in new lows. So if we put in a new low right now, so in other words, we come lower than this point, then that would make this high the SP, which we have just hit right there. So if we come up and take this now, there's a chance that we could run higher through this, so it would look a little something like this. Otherwise, expect it to run this low, pull back and go lower. As I stated earlier, overall I'm not expecting this to run super aggressively to the downside now, but it is making its way towards the low that we want it to take. Criteria is met and the overall bias is validated. The only thing is it's counter our pre-established trend, which is not ideal and we do not encourage, but we wanted to show you this example here to show you that this overall system tracking liquidity and tracking structure is going to work on both sides of the market as long as you respect the short-term limitations of the scenario that you're playing within. Okay guys, so a run of that SP with relative impulsiveness tells us that upside movement is pretty imminent. The buy side origin that we'd expect this to meet would be around this level. Expect this to be hit after this SP has now been tagged. Okay guys, so you can see that we have skimmed this low here, which we're looking to get hit to tell us that price is going to go lower. You can see it's 540. I am going to look to pack up here in the office, but as it stands, price is beginning to expand higher as we stated after taking this SP. If we hit this buy side origin, which is just inside of our previous area of entry, I would expect price to go lower. Then I would pretty much call that game over as far as we're concerned here. Volumes has dropped massively. We do have the FOMC this afternoon. If we take this low, I would expect price to go lower, and ultimately this would be my next target here. But I will update you guys what it looks like later on this afternoon. I will catch you guys then. Right, so we've now hit our lower target underneath this area of demand. We bounced off of this, hit our buy side origin, and we're now sinking down lower. So overall, if we hit this target point here, I'll be calling it quits right there before market closes. Of course, if the price does decide to expand, so be it. Nice partial move for this gold counter trend trade. Remember, at the counter trend, we don't want to be overextending our targets on this. Right guys, so that's the target right here, just about hit. We're going to call it quits here on this gold trade right there. Again, another great example of the same system being deployed with the liquidity and structural understanding. This is a counter trend move, therefore it needs to be used with less risk and the targets need to be more conservative. But if you've enjoyed this, I hope you can hit that like button, and of course if you're not subscribed, hit the subscribe button. But I hope to catch you in the next one, guys. Peace out.